Good morning, traders and investors, and I hope everyone had a wonderful, wonderful, wonderful Thanksgiving. It's still a Thanksgiving weekend. We're still on a holiday. Market's going to be open half day today. You know how I am. I'm an eager beaver. I need to be here with you. I need to make sure you guys know what's going on, and I need to make sure that I know what's going on for a half day trading session today. Now, folks, very, very important. Before we get into this, if you haven't subscribed to my Telegram channel, you're really missing out big. Go to rogerscott.com/Telegram. If you misheard that, just go to my YouTube channel. Go to YouTube, go to the search box, go to Roger-Scott, and subscribe to our YouTube channel. And all the links to the Telegram, to these videos, how to subscribe to our Telegram channel, how to subscribe to our YouTube channel, it's all there. And if you still can't find it, email me, roger@rogerscott.com. Couldn't be any simpler. I want to hear from you. I want to know how you've been doing. I want to know how you've been doing with my new day trading room. I want to know how you've been doing with the Pro Trader dashboard. I want to know how these videos are helping you out. Send me an email. I'm going to be hanging out today. Matt's working from home. I'm working from my studio at home. Please let us know. And if I've helped you out, let us know. I'd love to hear from you. This is a day that I want to hear from you. So please let me know. Roger@rogerscott.com. Now let's get into today's analysis. So you could see here, the Nasdaq's down about 10 points. Nothing really crazy. A little bit down. And again, remember, today's trading volume is going to be probably 1/10 of what it usually is, which means markets could be easily manipulated. There's not going to be a lot of follow through, and there could be some exaggerated moves with low volatility. So number one, you can't take what happens today too seriously because everything is going to be out of proportion to each other. And number two, you're going to have liquidity issues today. So if there's a big event or a big trade comes in, it can have a big impact on the market. Most traders, most professional traders are going to be repositioning today, adjusting their positions, making little cuts or increasing gains, and maybe day trading a little bit. There's not going to be a lot of meat and potato trading action today. Only guys like me are going to be here today trading. Most guys are out. I mean, I'm a lifer, you know. You can't get me off of the market. So the Dow's up about 90 points. The Nasdaq's down about 10 points. Why is the Nasdaq down? Let me show you why. NVIDIA got downgraded by a company. It's down about 2%, or was about 2%. Now it's down about 1.5%. But NVIDIA, large market cap, putting a lot of pressure on chip stocks. And when something gets downgraded on a holiday week, that can cause some turbulence. So keep your eye on NVIDIA today. Let's talk a little bit about what we can expect in terms of volatility, global economy, and then I'll get into the nitty-gritty for you, okay? So let's just go right here. All right. So treasuries, futures are up a little bit, as I just showed you. Nasdaq is down a little bit. Yield curve, Nasdaq, look at this. The TLT, the yield curves are starting to kick in, which puts more pressure on stocks, which is another reason why technology is down today. Remember what I told you. If this can maintain an upwards bias, that means there's going to be a higher odds of the Fed not taking any more aggressive action to the upside, hawkish action. However, they're not intended to till March, and the odds of in March are for them to start decreasing rates. I don't think that's going to happen. And those odds went from like 30-something% to about 25%. I wouldn't be surprised if they go down to zero. I don't think the Fed is going to be lowering rates in March. I think so many things would have to line up perfectly for them to do so, and I don't think they're there just yet. So keep your eye on the long bond. This is a really good gauge of what market sentiment believes in right now versus what the Fed is telling us versus what's happening in the market, because this is the long bond. So it's like a futures contract. It's what we're expecting down the road. And right now, look at this. This looks like a turnaround. Also, and this is something a lot of folks are not talking about, if you look at ARK Fund, which started the decline in stocks, let me show you something. Remember this? Up bull market. Remember COVID? Do you remember when I drew these lines and told you it was going to be the bottom of the market? I drew these, let's see here, a year and a half ago. And I have not changed them. And all of those who've been following me most of you have been following me for more than a year and a half, remember the moment. A lot of you thought I was crazy. Don't seem that crazy now. But this to me, because we went right back into the range, I think this is the bottom, and I think we're going to start heading higher. So I do think the market, as far as the stock market, has pretty much assimilated everything to the downside, but I don't think we're ready yet for upside. And I think we're going to get upside when this bar here gets broken higher, which isn't seem to be in any hurry right now. So we're still kind of choppy. Remember, these are all the degenerate speculative stocks that all the COVID buyers were buying that were running up. They thought they were geniuses in the bull market, and then the market came down and they were shaken out. So again, be very, very cautious, but keep an eye on this because this is a long-term perspective. Let's talk a little bit more about the economy. We're closing at 1 p.m. today. It's a half day. We had a 3.5-month high on Wednesday in the S&P. The Dow made a 3.25-month high, and the Nasdaq, this thing made a 1.75-year high. So those of you who thought we were going to go more into a bear market and we were going to go down, it didn't really quite work out that way. Labor market that reported on Wednesday that state unemployment benefits actually dropped. Remember I told you this was a nothing burger? Every time it goes a little higher, it just comes back down, which means unemployment is steady. Now, University of Michigan came out with consumer sentiment. It was revised upwards, which is positive. 5-year inflation expectation remains unchanged. So my question, if the 5-year inflation expectation remains unchanged, why does the market anticipate that the Fed is going to start lowering rates in March? It's a little contradictory, if you ask me, okay? Just saying. Durable good orders came in a little lower than expected. Again, we're not out of this yet. And I know a lot of investors are like, okay, things are getting better. It's ready to buy. And then we get pulled back down again. And it's been going on that way. Now, this is what I was talking about. There's virtually no chance of rate hikes this year, 93% in December. This was 99%, by the way. 99% in December. 93% in January. I didn't even realize they were having one in January. I thought it was in February, but it's in January. But now it's 24% that they're going to cut rates in March. I think this is buffoonery right here. Yes, I think this is monkey business. I think this is investors being so hopeful that it's just ridiculous. And I'm expecting this to go down, and as it goes down, I'm expecting the bond market to possibly start cooling off a little bit, which would put pressure on stocks, which honestly, it's kind of time. I mean, 3.5-month high, 1.75-year high. They don't go straight up, folks. They come up and then they come down a little bit. They come up and then they come down, which means it's a good time to buy insurance. Yes, and I talked about that last week in my VIP room. It's not going to happen today, but it happens Monday through Friday. And again, the link is below this video in the YouTube channel. And at least for now, it's still free. I've been talked out of charging for it, and people are really loving it, so I'm keeping it for now for free. The U.S. Global Service preliminary reading is coming out today. Europe is giving us very little tailwind. They're up just a hair, which is good. I mean, at least they're not down. Christine Lagarde stated on Friday that the central banks has reached a point where it can pause and evaluate the impact of tightening. Hey, guess what? That's what we're doing here in the U.S. and here's the thing. They don't want to say we don't know what's going to happen, but they just don't know what's going to happen. And I don't know what's going to happen either. I just think it's pretty presumptuous to price into the bond market a 25% that we're going to cut rates in March. That's a little too aggressive, and that's one of the reasons why stocks are going up right now so high. I just don't think that's a reality. I don't think we're there yet. But again, I hope I'm wrong, but it doesn't happen that often. But again, I don't mind being wrong, right? I just want us to make money. That's all. China composite closed lower as investors exercised caution due to concerns about the country's slow economic recovery, while strong foreign outflows also weighted on sentiment. Artificial intelligence, new energy, semiconductor stocks underperformed. China's not going to give us tailwind on a holiday, right? I mean, they're like the Grim Reaper, right? Japan closed higher, giving us a little tailwind. In catch-up trade after a national holiday as weakened yen buoyed export-oriented stocks. Export-heavy automobile stocks gained ground on Friday. They haven't been gaining ground here in the U.S. And as I mentioned, NVIDIA was downgraded by Reuters, reported that the company informed its customers in China. It's not downgraded. They informed their customers in China about the delay in launch of a new artificial intelligence chip designed to comply with U.S. export regulators until the first quarter of next year. Now, remember, NVIDIA also signed a contract with the U.S. government where they were not going to disclose certain things to China. That happened about 1.5 years ago, if I remember correctly. My memory's a little fuzzy, 1.5 years, 2 years. I mean, I do this every day. But I thought that was very, very cool. So it's interesting how they're going to be dealing with China and how they're going to be dealing with U.S. at the same time. So as I mentioned, I wouldn't be surprised if the bond market cooled off. I mean, a little too much too fast. Expect pricing in at a 25% expectation that the Fed is going to lower rates in March. I don't know about that. That's a little too presumptuous to me. U.S. stock market. Now, as you could see here, we are about to hit a, let's see here. Oh yeah, right here. Right there. Okay. Let me see how realistic that is. Ooh, that's pretty realistic. Let me just go back here, do this. Ooh, look at that. 3 lines. All right. So as you could see right here, there is, in fact, some pretty strong resistance, right around this level. Let's get a little closer look, which is right at 460, which is not that high up from where we're at right now. We're above all the major averages. Volume obviously has been dying down, so there's not a lot of commitment here as we go into the holiday weekend. But you could see right here that volume during this upside move has actually been cooling off. There hasn't been much conviction in this rally. To me, it looks a lot like short covering. It looks like positions that retail traders are taking. There just hasn't been a strong commitment. Now, I drew the same line on the Nasdaq, and Nasdaq is almost at swing highs. Let me just go across here, see how far we can get. Oops. There we go. Let's see. Right there. Look at that. Right there. And they say trend lines don't work. So you could see we have a resistance level here, and the next one is up at 403, 405. Let me just see right here, right there. 40 right here is the next one, 402 on a weekly. A lot of resistance right here, right where we're just a hair above us right here. Look at that. 399, 400, there's a lot of resistance at that level, right at the 398.95 level. And then you have the swing high right here at 406. So we've got a lot of resistance ahead of us. And again, with the sentiment that I'm seeing, I'm just not seeing the market just bolt through. So be very, very careful today. As far as stocks, as far as sectors, something else I want to show you. If you look 6 weeks, technology, semiconductors, QQQ, pretty much tech right here, speculative heavy. Over the last 3 weeks, semiconductors, home builders, technology, interest rate sensitive, consumer discretionary communication, all the red flags for tech right here. But look at the last week. Communications up here, but look at this. Healthcare, financial, utilities, S&P 500, and then the QQQ. The S&P is starting to go above the QQQ, which obviously means less speculative stocks like consumer discretionary, Russell 2000 are leading, and more regular blue chip stocks. And this is what I was saying last week. Don't be surprised if we started seeing blue chips start coming up and tech started coming down a little bit. And then tech will put pressure on the blue chip technology stocks or other blue chip stocks. But keep an eye on tech. I'm seeing weakness start coming in through the tech, and blue chips, defensive stocks holding up, which isn't very surprising, and I'll tell you why. It's the end of the year. What do hedge funds like to do at the end of the year? They like to buy blue chip stocks. They like to hold the safest stocks. They want to have the least volatility so they can make the most money end of the year. Notice, for example, stocks like Coca-Cola. Let me show you. Going up pretty well. Look at stocks like Disney, one of the stocks that we're in right now. It's up pretty well. So you're seeing a lot of blue chip stocks starting to rally. This is pretty normal at the end of the year. So don't be surprised if you start seeing blue chip stocks take over at the expense of tech stocks. Now, as far as giving you some red meat today, let's see. I still like Amazon quite a bit. I love Microsoft. I'm liking Uber because there's talks that it could be in the S&P. Buy the rumor, sell the fact. Meta's looking good, which is good because remember, these are blue chip tech stocks. Those are not going to be the first ones to go. But as far as non-blue chip stocks, I like, as far as non-tech blue chip stocks, I like Disney a lot. I like Visa. Let's see, what else do I really like? I really like Dell a lot right now. A lot. BK looks really good here. United Health looks really good here. I'm trying to focus away from smaller or non-fanged blue chip stocks. Tech stocks. I'm trying to stay away from, trying to keep you away from that. To the downside, this is it. SPB. This thing went down. Not much more here. This is about as SPB. Let's see 50-day lows. Walmart. I would wait for a little more of a breakdown in Walmart. Just a little bit, a hair. But Walmart, NE, and the stock that I was talking about right here, SPB, it looks awful. That's about it. Folks, be careful today. It's going to be remember, volatility higher when volume is lower. But at the same time, there's less traders out there. So we got to be very, very careful right now. We have to be cautious about our positions. We have to watch the sectors very closely. And we have to see if blue chips actually have a chance to break out around these levels. If they do, we are going to be golden because we're positioned pretty well for that. And be careful right now with tech stocks, especially second-tier tech stocks. The FANGs look good, but I think blue chips are going to rally between now and the end of the year if we continue to see this type of upside at the expense of some tech and possibly a reality check for the bond market that bonds are just not going to go straight up and we're not going to get an interest rate cut in March of 2023. I think that's insane. But again, what do I know? I hope you guys have a wonderful Thanksgiving weekend. I hope you send me an email. I really want to hear from you. Roger@rogerscott.com, and let me know if I've been helping you out. I genuinely do. Bye, guys. I'll see you later. Have a great weekend. And turkey leftovers, a little ham, all the good stuff. Don't indulge too much. Clyde is going nuts with the turkey. I'll see you guys later. Bye.